returns and successes. We have a target IRR for companies we acquire. For the social networking fund, for example, we have 25% per annum target IRR, and we will run the figures to see whether we believe the company will meet that IRR. We will make an exception to that if we acquire a company where we believe that it could add value to the rest of the proposition, that we would actually make up for it, not actually achieving the 25%, but we're pretty strict on actually doing that. With the impact investing fund, it's a very different set of criteria, but I think that was
Yeah, no, thank you. And going back to the impact investing, and given the partnership that the two of you have built, Scott, I have a question for you as a marketing guru. Given that impact investing on the LGBT side is actually quite new, and I think it was even shocking to people I know here who worked in impact investing and like LGBT. And as I was joking, they always think of the gay market as being the Chelsea boy with the six-pack abs and the four-bedroom apartment on the weekends having big parties. But how do we communicate to investors what this concept is? I mean, how do we introduce LGBT impact investing in a way that people will pay attention and understand this?
Well, there's two different things. I mean, again, because we were involved in the spirits industry, we were actually able to measure stuff, so that made things a lot easier. Because we weren't describing a market that they couldn't necessarily see. But I think there's some trends. We're lucky enough that we're probably working with, at any point in time, 50 different brand managers. And we're also calling on, or through our events and promotions in 15 cities, we see about 2 million gay consumers a year. So we're out there, and I think we have a very solid feel for the direction of a lot of stuff. And I would say the opportunity here is that more and more, especially on a consumer company with a consumer brand, they're trying to find, where am I new, where am I fresh, where am I undervalued, where am I under marketed right now, where is my opportunity? And more, multicultural is becoming a part of everybody's strategy for that. Now, gay and lesbian is not always considered a part of somebody's multicultural strategy, but it's the same group of people, it's the same kind of strategy. It's a strategy where you have to just stop your regular marketing and think and market to the people that you're trying to send your messages to. So as gay and lesbian is sneaking into or is starting to be grouped with multicultural, I think that's really the opportunity, because funds people are looking at multicultural, people are developing multicultural. They want to have the broadest possible view of what multicultural might be, and funds are being diverted into that for that reason. I think the other opportunity is that there's a little bit of a burnout with the other thing that's really refreshing about this, and I think that's what's important as a marketer. It's not the same. It's not, I'm giving 10% to this, or I'm giving a portion of proceeds to this. This is, I am making change happen. And I think that's a very refreshing place for a lot of people to be. And I think that could be a real opportunity, even in talking to foundations of companies, because it's not enough to just sort of be there and give, they don't want the controversy that comes with it sometimes, but I think this is a really refreshing change, and it's really showing a difference. And it's the equivalent of not only giving to Habitat for Humanities, but going down to New Orleans and building a house. You're involved in a much bigger way. So I think when they look at multicultural marketing, when you look at creating an affinity with people, and when you create a fresh look at how you're doing it, those are all really important ways to be noticed, to be different, and to really attract the attention of your consumer.
Yeah, and to that point about, for example, approaching foundations is one idea. Maybe you can tell us, there's a fine line in some ways, there's a fuzzy line between philanthropy and impact investing. Maybe you could speak a little bit to how philanthropy and impact investing are related, and what should the role of philanthropy be in the impact investing context?
Yeah, and I think, so building on what Scott was saying, I think we typically have this rather bipolar view of things. We think, on the one hand, over here is how we make our money, and over here is how we give our money away philanthropically. And so I think a lot of it is about educating donors and investors that we need to see that as one portfolio. We need to see that it's all one pot of resources, and it's about maximizing financial return on one end of the spectrum and maximizing social return on the other. And within that, a whole array of ways to deploy your capital to achieve those ends. So I think we have to get away from splitting the two. And I think in philanthropy, it's a perfect case. I mean, with foundations, particularly in the LGBT space, I mean, we've had some meetings here that are a little bit scary, that foundations within the LGBT world aren't even thinking about aligning their grant making with their investment strategy. So they may be funding really great LGBT work on one side and funding some of the best advocacy organizations in the space, but on the other hand, where their money is invested is contradictory to what their social objectives are. And so that's just a very basic concept right there within the LGBT space we need to work on. Having said that, a lot of the real innovation and momentum in this impact investing space has come out of philanthropy. The business world, if you take microcredit as a good example, we were sitting in this room a decade ago. I think only a handful of people would even know what microenterprise or micro lending was about, and now we have mainstream investment firms running businesses around that. And I think what we see that as sort of the same sort of trajectory that we're looking for in this space, where the philanthropy may have to be the early sort of risk takers to sort of demonstrate this market, but ultimately it can be adopted by the mainstream investment firms. And once it's shown that you can generate a really healthy financial return and not have to compromise that, but do it in a really responsible way, then sometimes the business community is not so willing to take that risk, and we have to use philanthropy to demonstrate that. So I see that as a real opportunity for bringing philanthropy in early.
Well, I could obviously go on with questions for hours and hours, but I think more interesting questions would come from you all, the audience, than from the moderator. So, at this point, I really would like to open it up to get your questions, because I know that there are a lot of them out there. So please feel free to ask away. I'd like to start. Okay, one of you two.
Actually, two questions. First, for Lee and Paul.
And make sure you speak up, sir.
For two questions. First, for Lee and Paul. I wanted to know, to what extent have you ever worked with LGBT companies, LGBT management, who perhaps don't service an LGBT consumer base, but have expressed a clear desire to contribute a portion of proceeds to the LGBT community or causes? And as a general question for that, what would be the minimum threshold? I know you talked about some of your metrics, but do you ever make exceptions for that, or would you look at it on a case-by-case basis? That's question number one. And Scott's question number two. On these domain names, do you have a sense of how they're being allocated? And has the list been published yet of which ones are coming out? When will the public be able to see which ones have been put out yet?
I think that's really too easy.
Well, the threshold question is a tough one because, for us, it really boils down to intent. So, first, we have to be sure that the intent of the business really is to create a social benefit. And there are lots of ways to sort of check that. And I think clearly the most important is that it has to be really built into the business strategy, that creating social benefit is not sort of something after the fact that you want to do. It's very much a part of how you design the business and how you build the business, and then how decisions are made in the business too. So, we spend a lot of time where in a social enterprise, different from a traditional for-profit, you may see a financial opportunity that you may not take because it might compromise your social objective. And that's not to say that you're giving up a potential return, but you're steering your business decisions in a way that don't compromise those. So I would say the intent and then the business strategy, really seeing how it's built into the core of the business.
Jamil, from our perspective, any investment in our stuff would be actually an investment in a fund or such like that would look to achieve financial returns, but then a part of that would actually go to support such as Galeforce Capital, it's a social enterprise. And we believe from that perspective the impact comes with the things that we're investing in. So it's the indirect as opposed to direct giving that actually really drive what we do as opposed to
On the new domains, there's actually a website that sort of tracks the announced new domains. There are probably 120 on that website now, and it's called, I believe, new GTLDs, which stands for generic top-level domains. Maybe org, yeah. So, but just type in new GTLDs, and you'll find ICANN and all sorts of other things, and you'll find your way around to that. The interesting thing is that I mentioned those that are published because what's going on as well, because a number of these domains are things that are going to be launched by folks who are intending to resell them, and who also don't want the competition that goes along with this, because in the commercial space it will be a bidding war to see who gets .news and who gets .wine, etc. So they just aren't publishing. They have no reason to publish. In the community space, part of what's been great is even though we discovered and realized the importance of .gay, we had to go to the community to get the permission to do .gay. So we've been endorsed by HRC, GLAAD, National Center for Lesbian Rights, the New York Center, the LA Center. We've got around 4 million. The NGLCC, the National Gay Lesbian Chamber of Commerce, the International Gay and Lesbian Travel Association, which has 70 member countries that have tourism departments, etc. So we're now going out and the community domains have to go and get that endorsement to demonstrate that they're part of a community. So they're the ones that are more public on that site, and then a few others that have just decided to announce. Somebody's doing .love. I don't know what that's going to be all about. You've heard .XXX just got approved. They said something about teenage girls, and I'm like going, okay. So, sorry, but I'm not lying. So it's an interesting study, and who's thinking about it, and more interesting in who's not.
Do you have a question as well?
Yes.
Okay, great. Look.
Hi, I was wondering if you could tell us what is the size of the LGBT market first, and the second question has got to do with when you see LGBT and you're talking about investing in a company, is there a breakdown to the L, the G, the B, and the T, or is it all done under one umbrella?
It's very difficult to get the size of the market. There are figures published in the US and the UK, and it's around $700 billion per annum in the US. How the hell they work that out, I have no idea. We sort of validated some of those numbers by looking at different matrices, and I think it probably is around that sort of figure. It was interesting in the UK when they introduced the civil partnership. The Treasury actually commissioned quite detailed research because they, in order to silence some of the critics, they wanted the financial argument around introducing a civil partnership. There were quite a few interesting statistics that came out, but we've always said that the LGBT market had higher disposable income. But the figures from the UK came out that it was about a 20% higher income period, let alone the higher disposable income. And the market in the UK was around £100 million, which in today's rate would be about $160 billion. What we've actually done ourselves in Asia, because the figures don't exist, and we're doing a lot of work in Asia and developing those markets. I just realised I've forgotten the second question. It's very my jet lag is coming through here, but we actually produced the figures and kind of took the GDP for each country, and then actually put the percentage of LGBT population, and then used the US and the UK figures to start to produce figures in terms of the discussions that we're